Hi everyone, welcome to my YouTube channel. Alright, so in this particular video I want to take out time to show you how to do a simple top-down analysis. Now if you are new into forex trading, or you've been into this market and you've been having some difficulty with being able to see maybe market direction or spot bias, what you need to understand is, first of all, you need to have a good top-down analysis. Then also you need to understand that there is no strategy that works always. There's no strategy that works always. There's no perfect strategy that always works. Market is dynamic and things can change in the course of time. So but what you need is what gives you an edge. So your top-down analysis is very important because it puts you in a place of an edge in this market. So usually as day traders, we expect to have a directional bias for the market for 7 days at least. So we start from 1 week time frame to look at the market movement, so we can be able to now spot entries in lower time frame. So that's exactly what top-down analysis means. Okay, so like the word says top down, so we start from a higher time frame and then we go down into a lower time frame, which happens to be an entry time frame. All right, so and one thing beautiful with having a simplified and a very good top-down analysis is that it gives you an opportunity to take a trade which, okay, even if as a day trader you intend to maybe close out of that trade, you observe that that trade keeps going up in a particular trend for a long time and will give you massive profit. So let's look at what we can see from here. There was a change of character here, okay, and then there's not yet any break of structure which will let us know if this is a bearish move. So let's look at historical data. You find that there was a change of character here and then change of character, so this is more like a range from the 1 week time frame to bullish change of character and then bearish change of character. So no yet a break of structure to tell us the directional bias, so it's more like a range movement. Okay, so what we do is that we drop down to a lower time frame that can help us see better what's really happening there. So this is why it is called top-down analysis, and I've simplified this one specifically for you so you can be able to understand this trading thing perfectly. Okay, so when you come down to the time frame, let's see if we can spot any daily bias here. Okay, so being that that was just a bearish change of character, I'll be looking for any bearish move here, and we can see this bearish break of structure that gave us this bearish move. Okay, this other one is like a retracement. Okay, so this is like a downtrend. So price is currently at this trend line. So with that, we cannot really tell the movement at this point because price is still ranging. So this is like a range because there's a bullish change of character here. So this is more like a range. So we cannot really tell the bias at this point. You can see it's range, then get this downtrend, and then range. Alright, so we go to 4-hour time frame. From the 4-hour time frame, we will then begin to look to see if we can see any directional movements. So from this 4-hour time frame, you see that range is clearly seen, though there's a change of character here, bullish change of character, and then bullish break of structure, but price has yet been ranging since then. So if for any reason price breaks this low, then we'll be looking out for a bearish move. But if price does not take out this low, then we're going to keep on buying this particular pair for the rest of the week. Okay, so it's now and then you come to 1-hour time frame and then go down to check exactly what the move is going to be. So on the 1 hour time frame, you can see that bearish look of structure here, which I think has taken its POI at this point. Okay, so you can see it. So this was, for anyone who did this top down analysis, this would have been a good place to take entry, because there is liquidity at this side, and here is the point of interest, is liquidity also at this side. So it's actually a good place to enter, and that's why anyone who caught this move to this point would have been in a big profit. But now there is a liquidity grab here, and there is no clear directional movement until when price takes out this low, this liquidity here. If it doesn't, then we're going to be looking at price going up to the upside. So that's when you can now come down to the 15 minutes time frame, where you now begin to find your entry. So this is that bearish move. Okay, you could have caught this entry because it's bearish. You can also catch an entry here because it's bearish, catch an entry here. So that's how to do a simple top down analysis. Then you also can go to DXY to check out the dollar index. So when you look at the dollar index, you can also look at it from the higher time frames. Okay, you can come from the 1 week time frame. I can remove drawings on dollar because I didn't do any recent drawings. Okay, so we can look at it from the 1 week time frame, and then we can look at what's going on. This is a bullish break of structure. This is a bullish change of character. So that means dollar is going up on the upside. You can see it. Okay, dollar is currently on the upside for the 1 week time frame. We go down to the 24 hours time frame. On the 24 hours time frame, we'll now begin to look, okay, to see if it's still on the upside. So you see that this is that, okay, no, this is that bullish move from the 1 week time frame. You can see what it gave, and then there's a retracement which is currently ranging. Then you go to 4 hour time frame, so you keep going down. That's why it's called top down, to your entry time frame. So on the 4 hour, you can see that here is the bullish move, and then another bullish move, so indicating that price, after retesting, might still go in the bullish direction. Then you come down to 1 hour time frame to give your full confirmation. You can see that all the sides are ranged, because you can see change of character many times. Let's just go back a little bit. Okay, so let's go back a little bit. Change of character, break of structure. Price go here and went downward. Then change of character, break of structure, change of character, break of structure. So change of character, bullish, didn't go bull, bullish, didn't go bull. So price has really been ranging from the 1 hour time frame. So for the higher time frames which we've seen, you see that price is going bullish. From the lower time frame, it's ranging, because even in the bull move, you see that we're in the ranging side. Okay, we're on the ranging side. So what you are going to pay more attention to here, you can see it's 4 hours time frame. The bulls moved, came down. The bulls are trying to move now. So if you are going to come to your entry time frame, which is 15 minutes time frame, what you're going to pay close attention to is if the dollar index will be going bullish or bearish, so that when you now want to look at other pairs like the euro, USD, the GU, and other pairs that are connected to the US dollars, you will then begin to look at BAs. Okay, so for today's entries, you look at the entry from 15 minutes time frame. So if you are looking at the entry from 15 minutes time frame, you will see that the bulls moved this market. So dollar was on the bull. He has retested now. It's currently on the POI and might still go bullish at this point. Like I showed you already from the 24 hours time frame, that the bulls are driving the market. You can see it's bullish. You can see that this is more like an uptrend before this retracement that came down. So we're going to be looking at price taking out this low. If it doesn't take out this low, that means the dollar index is going on the bull side, of which might be coming to this liquidity side. So that means dollar index will be going, and if dollar index is going bullish for a week, then it means that other pairs that you're trading, you'll be looking for bearish moves. So that means if we come to the GU, we go to the 1 hour time frame, you're looking at for the bearish move, of which if you look, you will see that there's some beautiful bearish move. Okay, you can see it on this side, it's ranged, and then we got this one, it came down to this point, and then we got this one, it came down to this point. Okay, and then we're looking at price maybe coming to this POI or coming to this strong low, so we can go bearish again. So that's actually how to do a top-down analysis. So but now you will not be wondering, how do you get this? You might not get this at the 1 hour time frame. You might not get this at the 1 hour time frame. How do you know that price will get here and then go down? How do you know that price will get here and go down? That's why you now need our complete analysis, which we do every Monday morning, and then review, which we do every Saturday morning. So during our review on Monday morning, you will notice that we took the top-down analysis from the 1 week time frame down into the entry time frame. So it's at the entry time frame that we now say, okay, we will be looking out for these factors, which is news, trends, side levels, price actions, region, volume, and pattern. So anytime price gets to any of this side, we're looking out for those confluences, and that's what will make us know that we're going to be going bearish. Okay, now to show you this in the historical data, you will see that, let me do that quickly, let me show you the confirmation for that entry. You see that there was a liquidity grab at this point. This is a bearish move, and then price is coming to a POI, change of character, break of structure. Here is the POI. So as long as the liquidity is fully grabbed, the price is going to be going bearish. So that's a confirmation for this entry. And then this other one too is the same thing, change of character, a point of interest. So and now price is taking out this liquidity, it's coming to this point of interest. If it takes out this point of interest and comes to this strong low, then we'll be looking for an entry. So if price is doing this thing at this point of interest, which is a bit long for 15 minutes time frame, and you're concerned to see if you can go in, if you can patiently wait for liquidity to be fully grabbed until we see a break of structure indicating the downside, it's always better that way. But if you're not patient enough and you want to scalp, you can now come down to a lower time frame, like the 3 minutes time frame, where you can now be able to look and see what can be done. So from the 3 minutes time frame, we can quickly see or catch little moves, like here it looks like a liquidity grab. So you can take a little bit of the move of this side down to the next liquidity side, which is more like a small retracement before price goes to that direction. Alright, don't forget to subscribe to my YouTube channel so that you can be able to see more updates on more videos which we're going to be giving you to educate you in this market. Thank you.